Hey, good morning, everybody. This is the professor with Day Trading for Success. So this morning we're going to be trading the open strategy. I'm going to go over it with you one more time. I don't think there's really been any changes. Today we're rating a breakout range of 13%, which means that there's a high likelihood we will break out. And then gives us a whole bunch of trades. So the ATR, well, first of all, read this disclaimer. I am not a licensed financial advisor. Please seek the advice of someone you trust before you try to emulate any of these strategies. This is an educational channel teaching through entertainment with different tips and tricks and trading demonstrations. So make sure you read that and get advice of somebody that you trust that's licensed. Today we're going to be trading the open strategy, again, 500 shares. We're going to be trading MU based on the criteria on the scanners. So basically the criteria on the scanners to find this stock was an ATR over 4, excuse me, a $4 rating over that, and then a price between $5 and $500. Obviously, you can set that differently. And then that you're going to come up with you should come up with 3 stocks. You want to set your stocks probably for 10 and then narrow it down to 3. How do we narrow it down? Well, first thing we do is we look back on that stock. Let me just auto zoom. So you're going to want to look back and make sure that there is some consolidation basically within an ATR range. So you can quickly figure out what the ATR is. Down here it was, I think, $5.80 or something. I'll go over the candle, but I didn't want to reduce it so you could see each one of these represents a day. So I could quickly look at the last candle, which I'll zoom in a second, and I could see that there was some action of consolidation. Now, some of the other stocks I looked at this morning were a little bit better, but the breakout rating range of 13% on this stock was unbelievable. Now, it doesn't mean that you want to say there's a 87% chance that it's going to break out, because that's not really how it works, but it's basically the level of the ATR versus the level of the pre-market, how you've marked out per the strategy, and then how much of that ATR did it take up, and we'll show you that a little bit more, and then I'll be trading right at the open so you can see how it works. But so first I look there, right, and then I'll zoom in on the most recent day. So this is yesterday right here. Is that yesterday? Is that today? No, this is yesterday. Right. So this is yesterday. So you looked at yesterday. It was $5.84. Basically to I'm just making sure that it was. I'm looking at the date there. So $5.84. So that's going to be $2.82. When you divide it by 2 and you subtract half of it from the close to get the ATR low and add half of it from the close right up here to get the ATR high. Now you've effectively given that whole $5.88 range right there. That's the range, high and low. So you've just kind of put us right that day right in the middle of that. So once you have those marked, that's where you're going to put your profit pivot points. But how do we figure out the breakout level so we know when to trade? Because this whole strategy is based on until it breaks the pre-market levels that were set. Now there's a bunch of different strategies for the open strategy. This one I'm trading between 7:30 a.m. and 9:15 a.m. that breakout level. Okay, that's the way it marks. So they say that and you do it on a 5-minute chart. So I've marked, unless this drops below this is the highest within that range. This is the lowest. Now, obviously, it goes back further than this, but these were not within, so this is the high and low within that time period. So I marked it. So now we can't take a trade till it breaks here or breaks here. So there's a lot more profit pivot points on the high than low. So let's hope that that's where it goes. And I'll show you how that worked out. So then you look at the previous day's action. I kind of wish there was more here, but I was able to find a lot of levels if it went long, just a few levels if it goes short. So what does that mean? Well, I'm looking for areas where the stock price turned around and pivoted, like pivot. They're called profit pivot points. So you kind of look, as I zoom in on this, you can kind of see I will have marked them. And sometimes it's a little subjective. Sometimes I'll move this slightly to pick up more levels or if it's a sharp wick. So it can be a body or a wick, and you're just trying to create profit levels that are sort of give you a little bit of room to maneuver, that they're not right next to each other as you start to trade. So like if this was the opening here the day before, you kind of want them to be able, like say this was the market open, this Fibonacci level, and then it broke through here. So I could take profit at that first level, or I could have waited to the next level. I mean, it's a discerning capability. You can do whatever you want, but there's a specific strategy that says you wait for it to break the level. Now, this is not the pre-market level, so I don't want you to get confused. It's just that we haven't opened yet. So basically, I was just showing you that's how we set that level up. And then I also marked the Fibonacci on a 10-day, 5-minute, and a 2-day, 5-minute. So that gives me more potential pivot points, profit levels, where I might want to get out because this price action has given you signals, or actually has turned around, not just a signal, previous days. So is it respected? Is it not respected? I don't know, but the whole strategy is basically based on assuming they're going to be respected. So, what are the open strategies really? Basically, by setting the pre-market breakout levels and then the ATRs, you're looking for short-term trends. That's all you're looking for. You're just looking to pick a direction for like a couple, 3 trades in the morning. And what can you have besides the 1-minute candle going haywire? Oh, it's a dip, I'll go in, and then you get stuck, or you can't get filled when you try to get out or whatever. So we always wait till after the 1-minute candle, which is what the strategy calls for. Never trade within the pre-market high and low in between those levels, and then trade short if it's below the ATR level, and only trade short when it's below that level, and only go long when it's above the breakout level. Now, that one change made a huge difference in the accuracy, right? Now, and that really made a big difference in trading for everybody that's been trading this. And like I said, there's 4 different ones. They're putting out a book about this. It's not out yet, but I'm one of the ones beta testing it, and they're not asking me as many questions anymore. I think it's pretty much done, but I'll trade with what I know has been done for it for now. Let me zoom in on this a little bit. So here we are right now. We're still quite a few minutes from the open, like 8 to 9 minutes from the open. So how do you figure out what the percentage is before you decide on this stock? So you're going to get a general idea of where this pre-market's going to be as quick as you can, and then you add up that number. What is the pre-market number in between these two? This was 75 cents. I have a bunch of people up here trading on Zoom with me today, and then I'm in a studio, and there's other people trading inside here too. And then the ATR range was $5.84. We saw that on the other daily chart. So $5.84. So you divide by, you take the 75 cents and you divide it by the 584, and you come up with a percentage, or you use that number as a percentage. And this was 12.89. So 13% of the ATR has been taken by this. So the ATR, what is that? That's the volatility rating of how that stock moves over a 14-day period, an average. I'm trying not to be too confusing. You should watch a lot of the videos. It's pretty basic and simple once you get into it. Once you set that ATR range, which is, I've just set the range, but it's written right here. If you get the ATR level, I showed you on the daily chart, you can get that. That's part of Thinkorswim. Excuse me, guys. I switched to tea. I'm not liking it too much. I just can't get that caffeine. But so, we've only used 13% of that total ATR range from here to here. So there is an extremely high likelihood the price action is going to move out of this, because that's its average, moves out of it. Now, we are kind of on the low side here already, so I'm hoping it doesn't go that way, but we do have a couple of profit lines down here. Now, you always want to have scalping skills anyway when you trade this. But anyway, that's how you figure out how to pick your stock. First, based on the scanner, then set your ATR and as close as you can to your breakout level. You know you have till 9:15. So I'm assuming when I set this, this is where it's going to stop. And it did. It's already past 9:15. So yeah. So when I set that, though, it was only right around 9:05. So it almost went below it, and I would have had to reset it, but it wouldn't have changed this percentage much unless it really dove down, and it did not do that. So I'm feeling pretty good this is going to break out, and that's more than half the battle, is that you need the stock to break out of the pre-market levels that you've set. Otherwise, you can't trade it, right? So when it breaks out, what's really happening? If I didn't have any lines at all, what's really happening when it goes outside of the range that it trade from 4 a.m., all the way to, from the time the market, or 7:30 to 9:15. It's telling you it's on a bit of a trend. It might be really short-lived, and it might just go that way for the rest of the day. You don't know. And that's why you go back to the profit pivot levels and you try to find areas where you can get out quickly. So what this strategy is designed for, those day traders that want to get in and out of the market very quickly with a couple $100, $100, $200, maybe $500. That's it. Now we're going to be trading 500 shares. Maybe we'll do more than that. I think I've done up to a couple thousand. Only trading for 15 minutes, and I'm following these exact rules. As soon as all of us started following these rules, 90+% were making money. It works. It works. Now, you do have to have some scalping skills, obviously, if you want to get in and out of trades as quickly as you can. But it really does work. So let me go over a little bit more about this layout. So this is a 1-minute chart. This is the scalping indicator down here. This is a 15-minute chart, the active trader tool. This is a level 2. This is a 5-minute chart. I have another minimized 5-minute, a minimized 1 hour, 4 hour, 5-minute, and the news, and then the daily was minimized down here. Now, all these are usually used to set it up for either this or the RV strategy. If you look on my links on here, I have all the books that we promote, like Day Trading Volume 1 is the RV strategy. It's like the best strategy out there. Lots of video archives for that. I highly recommend watching the videos and getting that book. There's a link. There's another one, the Candlestick Pattern Playbook. You really need to know your candlestick patterns. That's the Candlestick Pattern Playbook, or Day Trading Volume 2. There's also a Day Trading Volume 3, or the 66 Candle Patterns to Mastery. There's links to all those. And then Trading in the Zone, Mark Douglas. Those first 3 books are by the $1 Million Margin Club, who is putting out this new strategy, the open strategy, soon. And then there's Mark Douglas, Trading in the Zone, which is amazing to help you figure out how you are trading. Everybody's ready, right? You can't trade on the first 1 minute either. Tom Hougaard, Best Loser Wins. So I have links to those 5 books, as well as a bunch of other logbooks and stuff that I really strongly feel you can log. That was the very first book. Definitely losing my voice today. That was the very first book that I made a link to, because I found out how many people weren't logging. You need to put down your thought process. Why did you pick the stock? Why did you pick that share size? How did you do, and where do you think you went wrong or right? And write it down. It's not just a matter of numbers, it's thoughts. So you really should do that in a logbook. So the rules say, again, I think I just said, you cannot trade on the first 1 minute candle. So there's our breakout range. So I'm looking for, if it keeps going up, which it's doing right now, 135.45. After the first 1 minute, I'm allowed to take a trade by following the strategy. Now, obviously, I can do whatever I want to do. When I say allowed, there's nobody going to slap me with a ruler. But we all want to follow the rules for this strategy. Number one, we're beta testing it. But number two, it actually works. Now, before, I was doing a little freestyle scalping in there, and sometimes it worked and sometimes it didn't. But that was before they came up with the rule that you only go long above the high level of the pre-market breakout, and you only go short below. And if you get out, you have to wait for the next candle going that direction. So if the stock, the price went up here and I got in, and then it went up here and I got out and took a profit. And then it started to just hover here and stuff. I have to wait for the next candle, and I have to wait for it to break the next level before I can go in. It could come all the way down here. As long as the candle's green when it comes back, then I can trade it. But if it's still red because of the way it opened, you can only trade green I'm happen to make my candles green and red, but it has to be from the opening position of the candle. Price action has to be above it, and it has to be after your last trade, the next 1 minute. Might seem like some weird rules, but they really work. They're really effective. They're not stupid, and hopefully it'll work today. So far, it's worked for me every single time. 100% of the time, I have made a profit. I think that's right? Okay, I'm sorry, not 100%. One day I did not make a profit trading this. So Charlie, she's here handling the chat for everybody. Alan's off today, but there's traders over there that are always silent as a mouse when we trade here. And then I have these guys up here. So everybody's in their seats, and the market opens in 10 seconds. Now, we never trade, and that's the rules, on the first 1 minute candle. Now remember, I have a lot of free layouts and a lot of free custom scripts available on this channel. We hope that you like what you see and you subscribe and share. This is the custom script that's amazing. It's a scalping indicator. The red are the buyers, the green are the sellers, the blue column is the volume bar. This shows the percentage within the each candlestick, each volume bar. And it's really important to see where that is when you're scalping. Although the great thing about this open strategy is it's like a no-brainer. You don't really have to think. You just have to, other than think to get in and out fast based on what you see. But all of the strategy is laid out for you when you mark your profited pivot points. And I showed you how I did that. And I showed you how I marked the breakout level and the ATR level and the Fibonacci, high and low, 2-day and 5-minute, 2-day and 10-day on a 5-minute chart. So I kind of look at the bigger picture. We're getting ready to, wow, so we're going to go short here? All right, so I am trading market. I paused on that because, so I couldn't take that trade. And it was kind of already broken here. Where did that candle open? Right there, huh? So I could have taken that trade. I would have lost because, you want to get out at a profit level. I didn't even see this happening over here, so kind of glad I didn't get that trade. Technically, I could have taken it. I don't often do it on the second or even the third candle. And there's various reasons for that. It's me trading this a lot that I like to see maybe a confirmation off the first line. And here's an example of why I kind of would have liked to see it hit that profit, come back. Then I would have got in. Now I see a lot of action here, so I probably would, depending on the size that this candle closes, I would probably, but now it's going down. So, wow, it's really staying tight. It hasn't broken this range yet. I kind of thought it would. Now, some of the guys here do the bid and the ask, and some of them even do the ladder. Which is here where you can set your trades here. I don't really use that, but I'm so used to scalping. It might just break down. Now that's the point of control there. Remember to watch the videos about how I do this, because this is set for intraday and it's pretty important. Again, with the open strategy, all right, it's going to break there. Actually break it. I kind of want to see it actually kind of really break it, not just a little dab. Not liking the action too much, guys. I'm going to take the first, if it goes to oh wow. What did I get that at? 60? That's terrible. I'm going to just get out of that position. Wow, it was way up here. That was terrible. Okay, so I'm going to wait a second. Yeah, I was already at the first profit line, so that was $15. That's sort of the trouble with, what are we at here? Just make sure we're not, we are reconciling, right? 40. Yeah, we are. So that was very strange it's not strange. It happens all the time. And that's why a lot of the guys are using the bid and the ask. Now, theoretically, I can't take a trade till it breaks the next level here and it's green out of this candle. I just got out of that because to me, it looked like it was going to flush because I got such a bad position in the first place. So having done this a few times, I learned to get out of that move. Now, theoretically, I could have got in that trade, but look what happened. I mean, because it just barely breached it. Again, I'm not liking the look of this. I kind of want to see some definitive action here, guys. So it opened above that, which means really it should break through there before I get in, because it opened above the pre-market. So that means I wait for the next level to confirm that it's actually trending up like a short-term trend. And look, I'm glad I did. And this is why the strategy is the strategy, because it's been back-tested a zillion times. Okay, maybe not a zillion, but, you know, thousands upon thousands of time with hundreds and hundreds and hundreds of hours. So I'm really surprised it's staying so tight into this level. I thought we were going to have some serious action here, not $15 worth of action. So my goal today was to try to make $500, which is just to try to catch a single point on MU. I don't know if I'll do that. I have lessened the amount of, okay, so where did that open here? So I could actually take that trade. Again, I would like to see some definitive, I mean, if it keeps consolidating here and breaks, I might just go for it. But see what happened there? Now, getting out is up to you. You should have a trading plan with a max loss per trade. You know, so my max loss per trade today is $500. Now, it's an entire dollar, which is basically what I'm going for. So I'm taking some chances. That's a 1-to-1. But the other way to do it is to halfway down the previous candle get out, which also has a fib right there. So if I got in, I probably would have got out as quick as I could if it did that kind of a thing. But this is twice now, and that's not making me feel good. So I need some stronger action there. Let's see if the volume picks up. See how the buyers dropped off on the scalping indicator? So sorry this isn't more exciting, guys. You never know what's going to happen. So it looked like this could be a real breakout today, but maybe it's going to break out short. That's the upper and lower value of the volume profile. There's the point of control. So it's kind of really respecting those levels, which are set for intraday today. Now I have the 20, the VWAP, the 20, the VWAP, and the 9 moving average. Man, look at that consolidation in those little tight area. That's a 75-cent area. That's not speaking too much of a profit today, huh? Now, there is a strategy that doesn't market till the first 5 minutes, which probably would have had a high and low in very similar locations on the first 5 minutes. So if you can see, there's the 5 candles, low and high. Don't count the wicks because it'll average those out. But okay, give me something to trade. I'm going to have to trade something here. Give me something to trade. I'm going to take it. This could be one of those losing days. I'm going to take a trade coming up here, guys. If it breaks, I'm just going to go for it this time. If it breaks up there, it seems like it's... Come on. This volume profile is telling me it's going to pull up the point of control magnet and it's going to go up. That's what that's telling me right now. There it went up. The magnet just went up. Would like to be the price action to be above it when it did that, but that is sort of telling me that it's going to go up. So I'm going to look at the market maker and not that candlestick just in case. Oh, got it. Okay. I actually pushed it a little early there. Oh, no, don't do that. Oh, there we go. There we go. Okay. Now we got some profit. So, yeah, I let it go by the first profit line. I actually should have taken it right there. What was that, like $250? But we've been waiting for a trend, so let's see I often find that the first or second trade are the best trades. Oh man, seriously, did that just happen? No, it didn't. Okay. Yep, so we're going up, so I'm keeping this. Yeah, it is reconciling, which is great. It's just, if it goes up to 3104, definitely at the fib if it happens to go that high, but it looks like it might just pull right off of this. So now I'm doing market. This is where guys set the ladder. You know, you have to be just as quick canceling all and getting out. And of course you can flatten as well. There it goes. Broke that 84 level. Look at it go now. Here we go. I'm going to get out soon, guys. It's wavering up here. I'm just going to take that. 385. Now I have to wait for the next candle. This may keep going, but I wanted to bank that. So that's $385. That's not bad. So that's not a bad living, guys. Multiply that by 5. And then your 4 weeks by 4. And you've got, you know, after taxes, like depending on your tax thing, you've got like $4,000 to $6,000 a month right here, just with that one trade. $4,000 to $6,000 a month. So that's why I'm saying, like, even if it was just $100, let's just say you averaged $100. I mean, that's the whole idea of this channel, is to try to come up with these different strategies that people put forward. This is the second one by the $1 Million Margin Club, and we really liked the first one a lot. It changed lives. So now that just broke that level right there. So I don't know. So where did that candle open? Right on the line. We're right about where I got out, actually. Kind of like to see it break that fib, maybe. I mean, is this really going to keep trending up, or is it going to... So you can't trade the red candles at all. So here's where this... Oh, so that closed. Okay, so that's actually breaking right there. I could have got in that. I should have got in that. If that pulls back, I'll probably get in that trade. I don't want to get in it now. So that's 04. Oh, I'll take that. Oh, wow. That got me way too high. I'm going to get out. Okay. I got a few bucks, but it got me way up here, and I didn't like it. So that was a quick scalping decision, so I didn't lose if it came back down, because I ended up getting a position up here, and I wanted a position 11 cents lower. And this is the problem. You're going to get slippage when you're doing the market. Now, the people, I know some are up there bidding, asking, and we went ahead and said we don't all have to trade the same way. And I don't like that, particularly 500 shares, because I'll get a partial sometimes, and then you got to do the... I don't even have a flatten key up here, so... Then sometimes you have to flatten, or you're sitting here busy typing, or, you know. So I've got $95 to go if I can hope to make the, wow. That's doing the same old 4 again. Is that going to dip down? I need that to, I could have captured that. I just don't know if I would have captured it if I got in, right? It could have got me, oh man, now I regret not being in that move. So that's painful. Oh man, I missed that move. Ouch. Okay. That definitely could have got me over $500. So now I'm afraid to get in it. I'd kind of like to see a pullback and go on the next one. Well, unless it just keeps going. Yeah, I would like to see a pullback. Now, the rules say just keep... The strategy says just... should have just traded it, you know. Just traded it as it kept breaking. You know, if I missed the first one, go to the next one. And I did not do that. I'm a little bit of... Oh, man. That is definitely a candle I should have captured. Look at the strength of that candle. So, depending on the dip here, the strength of this dip is kind of where I'm going to decide to go in if I can catch this down. Look at the spread is like 10 cents there. This is why I'm getting murdered on the spread here. I don't like this, that the spread's so high here. I'm going to take that. Oh, I'm sorry. Ugh, that was illegal. I took it on a red candle. Darn it. I'm anticipating it's going to break there. I shouldn't have done that. And look what's happening. It's hurting me. So should I just jump out? That was a mistake. I didn't follow the strategy. So you get to see what happens if I don't follow the strategy. Well, now it's working, but I really thought that's what was going to happen here off this fib. If you guys have seen me scalp, I scalp out the fib, and I just sometimes can't forget my old ways, even when I'm trying to do something here. So it's banging off that fib. That's why I'm not getting out. I'd see if it came down here, which it looks like it wants to do to me, halfway down that candle. Yeah, I kind of looked at my entry as a green, and it wasn't on a green candle. So I'll let that go now. I messed up, but no biggie because we're nice and green here. So unless I just don't get out if it keeps going down, which would be 31.22-ish. Well, the spread put it there for a second. Jesus. Yeah, this is why bid and ask might be better. But you'd want to go lower share size because you don't want to get partials, right? Now we're starting to get, I want to see that break 500, but also there's a new high. Yeah, this is my last trade. Okay, so I'm going to hang on to this and see if I can make 500 unless it breaks down here. So, because I'm at the time that it is allowed. So it's when this trade closes officially, you can get out. It's supposed to be the first 15 minutes of the market. So there's my 5. I'm going to get greedy. Looking for a little higher. Looking at the market maker. Ugh. Now put me back down below 5 again. There could be some slippage here is what gets me. I'll take that. Yes, 535. Okay. Woo. Yeah. Part of the thing that gets me a little tense is having to follow rules and not just doing what I feel I know to do. But again, old dog can definitely learn new tricks. Absolutely. In fact, that's the story of my life, is learning something new. Try to learn something new every day if you can. And in the stock with all the trading gurus and all the books, and I'm always learning something new. Sometimes it's wrong that I learn, then I have to, get verified information because people speak it with such truth, yeah. So having a wide variety of opinions, including from what I say, wide variety is better. To really, you need to make your own. Sorry, this is so scratchy, guys. You need to make your own trading plan, your own journey. See, it's continuing to trend up. So, to trade, you should discover it on your own by trying these different strategies. So we're an open share station. All the custom scripts we have here, 10 of them are free. All the layouts I constantly make available, different layouts that we use in competition. And then the video archives have so many videos to watch. I highly recommend. There's always, some of the comments have said to me, there's always a jewel, some sort of a jewel. You think you know everything, and then I just drop some info that I don't even know I'm saying based on my knowledge, which goes back from trading one thing or another a long time, 30 plus years. So I have all this. I wish I like that show Limitless. I wish I could draw all that stuff, but I can't. So, and remember, it's always my recollection and opinion of the data, which is why anything I say or anybody else says, verify, for many, many reasons, and speak to somebody that you trust and trade in a simulator. I know I beat this up, but I hate it when people, are hurting. And I know most of the people trading the RV strategy are just killing it, 2 millionaires and are definitely making a living. Like hundreds and hundreds, maybe not thousands, are making a living, but thousands have been successful trading it. But I know hundreds are making a living, and a couple have become millionaires. And it comes down to your share size too, right? Now, good thing about this strategy is, if you haven't made the PDT rule right, look at it. It is trending up, so it did call the trend out. So if you were just doing normal trading and didn't follow this, and you got in with like 25 shares or something, that you could manage your day trading plan and just held it, that could work too. You just never know when this is going to turn around, and that's why these things were developed to the most conservative way to make money. A conservative way to make money on the open? Is that even possible? I don't know. It's very dangerous to trade the open, but following strict guidelines that have been tested and tested and tested is a pretty good way to do it. And like I was starting to say, if you haven't made the PDT rule, I like the idea of the one and done. I mean, the first trade, I don't know how many trades I totally took. Was it 2 or 3 trades? 3 trades. So, yeah, so it wasn't really a one and done, but I think the first trade was a couple hundred, and the second trade was a couple hundred, because I think I was 250 or something. So, but waiting for the right setup, maybe after it's broken 1 or 2 of these levels, then getting in, and just get out. It's a round trip, counts as one trade. You can do 3 of those a week, and then slowly build up 100, 200, 500 until you get to that 25K. And 6 months or a year, maybe less, trading this type of a strategy. Now, when this book comes out, I hope soon, I will have a link to it. I know it'll be available on Amazon. You don't need to go through this channel. I know a whole bunch of other YouTubers are going to have it, because there's been a lot of people testing it. Everybody's been looking for something to trade the open. But basically, the nuts and the bolts of how it's traded, I just went over. So if it was confusing, just rewatch it. I will have a playlist for the open strategy. Some are the really old ones are from open strategies prior to this, but the newer ones in the last couple of months, if you just look at the dates in the playlist, there's a whole bunch of different open strategies. And it's been evolving because it's not out yet. We're beta testing it. That's what happened with the RV strategy. We beta tested it for myself and the other traders until it just got to be so incredible that now everybody's kicking butt with it. But remember, learn your candlestick patterns too. That book's there. Now, that didn't come into play so much here, but as you get into the later open strategies, the 5-minute open session and the 15-minute open session breakout ranges, knowing your candlestick patterns on a 1-minute chart, very important. Very, very important. What do they call that? The PPP. It has something to do with the pandemic pattern situation, how patterns changed over the pandemic. I can't remember what it is. But anyway, okay, guys. Well, listen, thanks for watching. I hope this was instructional and also entertaining and fun to watch. Be careful out there. Always stay inquisitive and stay green. Go green. And I will see you next time.